One of my commenters asked me to explain depreciation for rental properties. I'm not a tax attorney, but I have played one on TV. When you spend a lot of money on your rental property, if you do something like replace a major system or do a big remodeling project, sometimes these things are called capital improvements. But examples would be buy a new roof, replace all the windows, put in hardwood floors, an HVAC system. These things are expensive and cannot be deducted all at once. They can't be deducted the calendar year that you actually have the expense. Let's take the example of a roof. Let's say a roof costs $10,000. If you spend that money this year, when it comes tax time, you don't get to deduct the entire $10,000 to lower your taxable income to save money on taxes. You have to deduct it over a long period of time, a little bit each year. For a roof, that number is 27.5 years, which is a weird number, but don't complain to me, that's the IRS. So to make the math a little bit simpler, you can't deduct the entire amount, but you get to deduct about 4% a year. And then after 27 and a half years, you've deducted 100%. In the case of a roof, that would be, instead of deducting the whole $10,000 at once, it'd be about $400 a year you get to deduct. By the way, don't try to do this yourself. You're going to need a tax attorney for this. And so that's called depreciation. And how's that different than a deduction? When you're talking about routine maintenance or repairs, think of a plumber fixing something in a bathroom that's leaking and charging you $400. Obviously, you can deduct that $400 from your taxable income that year and save money on your taxes. So capital improvements, all those categories that I described that are usually expensive, including remodels, have to be depreciated over a long period of time. And routine maintenance and repairs can be deducted in the year that it happens. Got any tax questions for me?